Mr. Mark Selby. How are you, sir?
Mr. Matthew Gordon, doing very well despite these wonderful markets that we're all experiencing. It's the biannual 60% off sale in the mining space. So.
Oh boy, I know. But that's the interesting point you make. It's cyclical, right? And guess what happens at the end of it? We get back.
Things go back up again.
Things go back up again. So are you what's your message to people? Because I know the selling off, the risk off, the cash in hand, and people talking about it like they're absolute unadulterated heroes. Because they think that there's more bottoming to come, if I'm allowed to use that phrase. And they're going to dip in at the right moment, or they're going to sit back and wait till things are just that little bit better. But however they're playing it, I mean, what's your take on these cycles? You've seen a few.
Yeah, no. I mean, I'm not an active trader. I'm more of a long-term Buffett sort of value guy. And from my perspective, these scenarios, it's these times where it's like, you just start to put cash to work in names that you like, just slowly pick away at them. Because again, the turns always come a little faster and harder than when you think they're going to be. Again, if we go back to spring 2020, April, May 2020, after the COVID whacked things, and I talked about, copper, based on the physical indicators I see, look like copper, is going to start to make one of its moves. And, load up on stocks like Capstone, Taseko, whatever, that were near multi-year lows. And, within 6 months, they're up 10x. So, maybe you can time things perfectly, but, it's not a bad thing to be able to, to be positioned into those things and then be nervous about chasing them up on the way up. Again, people are, technical traders may be a lot more comfortable with that. But, again, I just, own good names. When stocks are the only thing people don't like to buy on sale, which I find, again, the psychology of that is fascinating. So
that's very much Warren Buffett style commentary. He's like he's a big fan of when the price goes down, because the underlying asset hasn't changed, the fundamentals haven't changed. What has changed is you're able to buy it cheaper than you were previously. So maybe, again, big discussion. Not going to sit here and tell people what they should and shouldn't do, but I just wondered what your view was in terms of investing mentality and behaviors in terms of this kind of, cashing up. But there we go. Look, we're going to talk today about a few companies and a couple of new names, actually, a little bit exciting as well. But we better do our market summary initially. So, where are we with China slowdowns and LME inventories?
Yeah. So nickel prices, have come off in June, along with the rest of the base metal complex. We're down to a $22,000 to $24,000 a ton range and kind of whipping around 20 to 30 cents a day, or, $500 a ton in that range, or, that's $10 to $11 a pound for the non-metric people. I think one of the things in terms of where nickel is versus some of the other metals, we've seen copper and zinc, basically break through the, where they started the year and headed back down into lower level territory. But nickel, sitting north of $10 is still above, where we started the year. So again, I think in terms of the recovery out of here, in the early 2000s, the commodity markets ripped, off the back of China. And so most of the world went through a prolonged recession. But anything that was exposed to China, like base metals, went through a very short recession in 2001. I think this slowdown is going to be, the way it gets bifurcated is EV metals, and anything tied to EVs was going to bounce back relatively quickly. And I think the rest of the economy is going to go through one of its, typical 12 to 24 month, recessions, of which we're kind of 6 months into it today. So, where nickel's trading right now would be consistent with that thesis.
Right. Okay. So basically, kind of fairly sloppy markets at the moment, but you've kind of got I'm interested in what you said there. So you reckon as much as 24 months there?
Oh yeah. If you look at any global economic cycle, you go back over time, you end up with what was unique about 2001 is typically when you look at historic cycles prior to that is you would see prices come down kind of bottom out, over that 12 to 24 month period before you started to see things recover. But in literally prices, hit their bottom in October 2001, and within a year, we're already, up 30 or 40%, and then up the next year, even more so. So it was a very, for the metal space, it was a pretty tight recession, but for, again, the broader economy was a pretty ugly, 12 to 24 month period. So, I mean, that's kind of, for me, sort of, how things feel.
Okay. And yeah. What about these inventory levels? It's not like people have stopped doing stuff.
No, I mean, that's the thing that's, I think, helping the whole thing out. I mean, despite how sloppy everything is, despite, China slowing down, despite, with all the lockdowns, despite, all of the bad economic news, which, again, causes people to sit on their hands. We've seen LME inventories drop another 5,000 tons. So, again, those things can be played around with a little bit, but, generally, the fact that it's still heading in that direction says, we're not in a position where the market's oversupplied at all. And I think one of the other things that's going to be helpful here, part of why things in nickel got even messier was that, the LME stopping trading, and then all of the price resets relative to the LME price in terms of premiums, discounts, all of those just went, to blank, 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 blank. And so that's caused buyers to go, well, I don't know what the price is. So if I really don't need my nickel today, I'm just going to, sit on my hands and wait. Over the last, I would say through June now, where things are kind of back to, things that should be at premiums are at premiums, things that should be at discounts are discounts, and things are sort of, quote, in a more normal range. So, I'm hoping to see, and we're seeing some signs in China just more broadly around, the stimulus starting to have an impact there, which is what I think will happen in the metals front. So, I'm cautiously optimistic in terms of, starting to see some real demand come through in July.
So down another 5,000 tons, but in the context of what? I mean, what does that leave us with?
Overall inventories, we're down at 67,000 tons.
Okay.
And on a weeks of inventory basis, we're pretty close to where we were across not just the LME, but across, the supply chains as a whole. Pretty close to where we were when the nickel prices were at $40,000 and $50,000 a ton back in 2006-07. So, the market's not as, not in the big deficit it was in 2021, but we haven't flipped into any kind of sizable surplus yet at this point in time. So.
Okay. And what about some of these other variables that we like to look at, was, stainless prices, et cetera, and NPI prices?
Yeah. So we've seen stainless prices. So the whole chain, and part of this correction come through in May, June. So stainless prices, NPI prices, ore prices have all come down. Again, from a fundamental perspective, ore inventories are this time of year should start to tick up because they have to go back up in time for the rainy season that comes in October, November. But we're still at record lows relative to where, we've been before. The good thing with the stainless prices, again, I've always point, to people, if you want to look at a number, to kind of get a sense of where the market's headed. Stainless prices are off, but they're still up from where we were at the beginning of the year. And more importantly, we've seen stainless inventories shrink pretty dramatically in China. So that's a good sign. And again, sort of leading me to, that July, we will be interesting to see it. And I think we'll start to see some, fundamental demand, finally filter through and kind of get through this sloppy that we've been through for quite a bit here.
Right, and what's happening with, our dear friends at LME, nickel prices in relation to nickel sulfate? I mean, what's happening there?
Yeah, so sulfate's back at a premium,
right,
to the LME price. NPI is still at a discount, and again, as I said at the very beginning of the year, it was going to be at a big discount all year because we need to soak up lots of Indonesian supply, which is coming through. I mean, that's up 30% year over year. But, the sort of the hierarchy of all the various premiums are starting to come back to normal. The one thing that's still trading relatively high is LME deliverable forms of nickel. Any high purity product is still trading at a pretty sizable premium to the LME price right now. So, that's intriguing that's stayed up. But again, I think it's just more a function of Western consumers wanting Western nickel and not wanting to buy Russian nickel, which is typically the biggest source of LME deliverable nickel.
Right. Okay. And we obviously, I think the big conversation of certainly the last 12 months has been around matte and matte production. I mean, is that made a dent into these markets at the moment, or
the shift is definitely happening. What's interesting, already is the amount of, and I'll get the stats for the next time we have a chat. Is you're in terms of people using nickel to make batteries, the proportion that's coming from nickel sulfate is really shrinking. Pretty dramatically. It's much more of the intermediates like matte, like mixed hydroxide, mixed sulfide. There's still a mismatch right now in terms of battery consumers who can use the product. And because again, it's kind of a chicken and egg. You don't want to put that capacity in until the matte shows up. But once the matte shows up, you need to have a place to start to use it. So there's going to be some imbalances in that over the next 12 to 18 months. But again, as I said at the beginning of the year, by mid 2023, we should see most NPI producers be able to take 30% plus of their capacity and convert it to matte. And you'll see most of the major battery consumers be able to use matte as an input into their cathode plants. Okay.
And if we look at the markets, obviously retail investors, high net worths, are obviously a little bit nervous. They're taking a pause for reflection. Industry, they're committed. They are committed to this EV demand that they are gearing up for, and they think is coming. Yeah. And indeed, they're probably pushing themselves. So, is China? Is China immune to sort of the vagaries of the market, or like everyone else, are they just plowing ahead full steam?
Again, they read the headlines too. So and traders trade. So things they did sit on their hands a little bit. But my view has always been by the second half of the year, the continued strength in the EV sector is just going to, people are going to be, I'm going to start ignoring the headlines because I need to buy the inventory to make the batteries that I need to deliver next month. And so I think that's really going to assert itself, through the second half of the year. And there's some early signs that's already starting to happen. So, that freight train is going ahead, 100%. Full steam. So
we also saw a little bit of news, and I'm just wondering how you think that this, because people talked about, they'll design out certain components, whether that be cobalt or nickel or
Yep.
whatever from batteries. So technology is a big enabler for companies to work out what can they improve their economics, and use cases are quite useful too. So saw a bit of news out of China saying that one of the battery manufacturers had built a battery, or designed a battery to be built, which was exceeding even Mr. Elon Musk's efforts so far. So, I mean, do you expect to see more news like that? And are you at all nervous about things like that?
Yeah. So in terms of, we are going to see a huge amount of new battery technologies come forward. I am not nervous at all in the short and medium term, just because, again, to have a battery in devices that people hold in their hands all day long, or they have their family sitting on top of in a car. The safety testing to make sure that these, batteries are 100% safe, blah, 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 that will take several years. So even if somebody makes a breakthrough at a lab scale, to be able to get to a point where you're, putting that technology into millions of cars, will take, things will move quickly, but it'll still take, a half a decade to get there. In terms of nickel, what nickel has going for it and why, again, as opposed to contrast it versus cobalt, nickel is the metal that has the highest energy density. So in any of sort of those types of battery arrangements, nickel gives you the most range of any metal. So so battery companies have an incentive to try and maximize the use of it wherever possible. Where cobalt got caught up was cobalt's main purpose in the battery was that it was still good. From an energy density, not quite as good as nickel, but still decent. But its purpose there was just to stabilize the battery, because having a 100% nickel battery caused those batteries to explode before. So the battery, and cobalt's expensive, right? Cobalt's generally 2 to 3 times nickel. So there was a massive financial incentive. There was all the ESG issues around cobalt supply, and it was just a matter of improving the manufacturing of the battery so that you didn't need the cobalt. You could get to the same safety factor without as much cobalt. And that transition was supposed to happen in 4 or 5 years, and they kind of got there in about 12 to 24 months. So that was always the risk with cobalt. That with nickel, there is not that risk at all. And as said, we're going to start to see the big U.S. car companies are going to start to make their big pickup trucks and SUV. The electric versions of those are going to start rolling off the lines as the year goes on. So.
Okay. Oh, it's interesting. So I think it was the Keelan battery we were talking about that, where I was talking about. Interesting to see how that evolves over the next 2-3 years. As is always the case with these sort of nascent industries, you think that's it, but you kind of forget there's a version 2, version 3, version 4, or 2.0, whatever. There's a long way to go. There's a long way to go.
Oh, for sure. Yeah, we're still, again, we're really excited because we're sort of at kind of 6% global penetration.
Yeah.
We're a long way from 100%. And then the other point I would make to investors around nickel versus some of the other battery metals, nickel gives you sort of an inherent hedge against some of that because, unlike lithium or graphite or cobalt, which are really, over this next decade, all about batteries, nickel still has a very large demand base that is not electric vehicle based, and it continues to grow pretty rapidly. So if for some reason people come up with a brand new battery that doesn't need any of the battery materials we're currently using, it's going to be, zinc iron. Nickel will still be needed. A lot of nickel will still be needed for a lot of other applications. So
it will. There's a pretty big market without the EV revolution for nickel for sure. Certainly, as you keep saying, we need all of the above. And talking about all of the above, we've got a few names we want to talk about today, and a couple of new names. Should we start with the new names? That'll be a bit exciting.
Sure. So, as we have discussed, one of the rarest things in the mining space is a brand new nickel sulfide discovery, and a company called Azimuth Exploration, who's working with another ASX listed company called Mount Royal Resources, has a property in Quebec in the James Bay region, which has opened up pretty dramatically over the last 15 years for more exploration. And no, this was good exploration. They flew the geophysics. They identified they were looking for other minerals besides just nickel, found an interesting nickel target, did the groundwork, found, basically bashed some rocks and found some rocks that had more nickel and copper in it than would normally be there. And then did some more detailed geophysics and then drilled a target and came up with, several meters at 2.5% nickel, 1% copper. And so, that's exactly, those, anytime you get multi-percent nickel, you should pay attention to it. And, in terms of the things that I've talked about before, in terms of investing in early stage exploration, first off, in terms of, in the past, we've talked about, the rules when you're looking at an early stage exploration play to decide, whether to get involved or not. So, one, have you hit some multi-percent nickel, at a depth that's not, halfway to the center of the earth? And so this, definitely gets a big check mark here. Number two, does the company really give you a great idea of the geophysical extent of what the potential target is? Can this turn into something of size? So these guys, again, very well laid out press release showing, the specific higher grade targets and the overall structure, and what they're looking at, as a possibility in terms of a target. So, a big check there. And then the other piece is, again, is it a couple promoters who are doing this, or are these guys who've actually found and built mines before? And so, Azimuth is a very good Quebec exploration company, that's done a lot of work over time. And then Mount Royal, I don't know all the members of the team, but one of their directors, a guy named Michael O'Keefe, He was involved in a extremely successful iron ore project in Quebec, Champion Iron Ore. And so again, he has all the right connections in Quebec, has paired up with a great Quebec explorer. So yeah, no, I'm very curious to see what happens with this story. And I think because it's kind of a Canadian asset, ASX listed company in the markets where they are, we didn't have the kind of bump that you would see off a new nickel sulfide discovery. So I would encourage people to really take a look at it. So again, we need all of the above, and it's actually great to see a brand new discovery. So.
Yeah. No. Well, I like what you're saying. I especially like reminding people that you back winners. You back teams who've done it before. It's one of the big pillars in terms of your investment strategy. Have they done it before? Are they invested and involved and incentivized to make sure this one's a success too? Not just a nameplate board director for sure. So anyway, two really interesting ones there, which we've not talked about before, and I certainly haven't been looking at, and definitely will be now. And then we've got some other names which I think we have made the odd appearance on the show, which is should we go with Cannon Resources?
Sure. So they're stepping out. So Fisher East was a deposit that had a small resource historically, and they're stepping out. They're not big step outs, but they are extending the footprint of the resource there again with multi-% nickel. Over some decent widths. These things will be a question of sort of how big can they make it. There are a few hundred kilometers east of the Mount Keith area, so you'd need to have something of some size. But again, in a market that doesn't have a lot of new nickel sulfide stories, it's good to see them successfully continue to step out. The other one that we mentioned before is Orford Mining. I know I banged the table on that a while ago. The challenge with the opportunity is it's in a remote part of northern Quebec. And so you really only have a 4 to 6 week exploration window each year. And so you can only get a certain amount of work done. They advanced the gold project, another big step forward. But again, lots of smoke, but not quite there yet. But the other thing that has not had any drilling up there is they before Wyloo spent $600 million on Noront. They actually signed a joint venture agreement for the West Raglan property that Orford has. That was the original property we spun Orford out when I was at RNC, based on, and honestly, it is in my view, the best high grade nickel target in the country. Wyloo used sort of this past season. Use the right kind of ground geophysics to be able. These targets are difficult to identify via geophysics because basically all the rock is magnetic. But they've used the sort of the latest, greatest technology, and my understanding is they've got some pretty good targets, and they're going to be drilling them this summer. So keep your fingers crossed there that they've got some shiny pictures of core that come out in the next few months, and we'll see where they do. And again, the valuation right now. You're not having to pay up big value at this point in time, given where the stock is.
Yeah, no, I caught up with David actually in Quebec. Had a good chat with him. Obviously, their focus very much on the gold, but let's see what Wyloo do. I guess the good news is that they've gone past phase one of that partnership into phase two, committing a bit more money. Let's see what happens there. And then. Was it Pacific Nickel Mines? I think we said we'd talk about.
Yeah, we've talked about that a while back. So they're a laterite direct ship ore operation, or not operated, project that's now moving into operation. There's very few laterites outside of Philippines and Indonesia that could actually be used to supply China and plants elsewhere. But they've got a deposit in the Solomon Islands. They signed an offtake deal with Glencore. To market that material. So these are deposits that were initially discovered by Inco back in the 60s, 70s. But the Solomon Islands is one of those places that is challenging from a political perspective. There was a deposit back about 10, 15 years ago that ended up going to court because two companies claimed they actually owned it. But it's great to see this project advance. Because again, we need all the nickel, and the other sort of piece of news is that the giant overhang is now gone. So J.P. Morgan had their quarterly results this week and announced that they're no longer exposed to Tsingshan because they were one of the main banks that had a lot of exposure. early on, and through the reporting there, they said Tsingshan short position is down to 30,000 tons, which is a much more manageable number and decent for the market overall.
Absolutely. And look, I don't want to talk too much about this one, but I do want to bring it up in this conversation in case people kind of miss the conversation we had in Quebec, right? So the conference organizer has quite kindly agreed to give us the videos from those. We got those yet from Quebec. I did a few fireside chats on stage. You were one of them. Didn't really talk about nickel too much, did we?
No.
But we did talk about something which I think is super, super exciting. And if go watch the video, it'll be up later today that I did with Mark at the, what was it called? The Mining Investment Conference of the North, SNAPI, Quebec. Great conference, good conversation. And we talked about carbon credits because you're continuing to do more work on this zero carbon side of your nickel story. But on top of that, this carbon credit thing seems to be growing into a behemoth of a opportunity in front of you. So do you want to kind of just summarize that for us?
Yeah. So the type of nickel deposit we have is an ultramafic nickel deposit. There are other companies, FPX, Giga, that have these deposits in British Columbia. And these types of rocks have this great property that when they're exposed to air, they spontaneously absorb CO2. So, why I was excited about, Crawford initially, A, it was a great big new discovery, but B, again, I think these types of deposits, given the fact that after you're done mining, your tailings and waste rock spontaneously soak up carbon in today's environment seems like a pretty valuable property to have. And so, I think that these types of deposits are going to be the key source of nickel going forward because people want clean, green, low carbon nickel, zero carbon nickel, and these deposits can actually deliver that. So it's pretty compelling. And so, we're continuing to make some great strides and, stay tuned on that front.
Well, definitely stay tuned because, I think we joked, despite having the world's 5th largest nickel sulfide project in the world, it potentially could be a byproduct compared to the carbon credit market. That's how exciting this is. But I won't kind of dampen or spoil the viewing of the fireside chat. I think we went into a bit of gruesome detail in there, and there's some numbers that you allow people to kind of work out the potential of this. So, and if people do want to talk about it, maybe we can do a little show on it because I think it's pretty exciting stuff, not just for Canada Nickel Corporation, but also others, and it gives you a sense of the scale of the market opportunity in carbon credits too. Well, there you go. That was a good session.
There we go.
Good session. Some nice new names to look at. A few opportunities.
Yep. Yeah. The Azimut and Mountain Royal. Yeah, pretty exciting. So it'll keep an eye on that one.